Well, we're joined by Marc Faber. He's editor of the Gloom, Boom and Doom Report. Marc, thanks for coming in. Well,
my pleasure, my pleasure.
Wall Street tantrum is what was expected, according to one guest we had, but you think it was a bit of an underreaction?
Well, basically the market was technically in a weak position and ready to go down regardless of who would be elected. And I think we had the first downward move now, and probably within the next 10 days we bottom out, and then there will be a rally into January, but no new highs, and then we'll drift again lower, in my view.
Well, of course, everybody's talking about this so-called fiscal cliff. It's getting quite dull now.
Yes.
It's being used constantly. And I tell you, I mean, there's...
Mathematically, they can't do very much because the spending is out of control, and to increase taxation at the present time, even if you took everything away from the 1% richest Americans, it would make a difference annually of around $100 billion on a deficit that is over $1 trillion. And with the unfunded liabilities, the deficit is over $5 trillion. It won't make a difference. The problem for the deficit will not occur right away. They can meddle through another 2-3 years. But eventually it will be a big problem.
Right, but will it be avoided? Will they come to some agreement? And, you know, the thing is, if they do come to some agreement, then we may well see a rally in the market.
Yes, yes. They will agree to something, a little bit of tax increases and cosmetic spending cuts, but all backloaded 10 years from now. So in reality, the deficit, in my view, will stay at over $1 trillion for the next few years.
So if you're right, what's your trading idea you get from that?
Well, I think that people don't remember the market in America. The S&P was at 666 on March 6, 2009. We're more than 100% up from that level. A year ago, the S&P was at 1,074. We are now at over 1,400 we went to, and now we're starting to go down. The markets had huge moves, not in China. The huge move in China was on the downside, as well as in Vietnam. But say, in the US and in countries like the Philippines, Indonesia, Thailand, we are up hugely from the lows, and these markets are no longer particularly attractive. In fact, because of the money printing, it's very difficult to find assets where you can really say they are undervalued. They are very attractive. I think from here on...
People keep on saying that about China. They keep on saying that, well, these valuations are very low, they're a bargain.
Well, look, maybe the market is telling you something that the statistics that the government is publishing are not quite as reliable as they should be. And in my view, yes, over the next 6 months or so, I think both the Vietnamese and the Chinese stock market will bottom out. But it could be down another 10% from here, or even 20%. Who knows?
Okay, I'm going to separate those out. Okay.
Yes.
Talk about Asia.
Yes.
Where's the boom? Where's the boom going to come from?
I tell you, if you look at the geography of Southeast Asia, you have in the west Myanmar, and further west India, in the north China, and then east of Myanmar you have Thailand, which is quite a developed country. And then east of Thailand, you have Cambodia, Laos, and then Vietnam. And that whole region of Southeast Asia will be linked by rail and roads. And there are 200 million people there. The more advanced economy within Southeast Asia is Thailand, and the others, they have a GDP per capita like Myanmar, Laos, Cambodia, of say around 1,000 US. There are 200 million people. That region will develop a lot. But my concern in Asia is not even so much the valuation of equities as the political developments. We have a new leadership in China, and in my opinion, the military will be stronger. And we have this continuous disputes with Japan and the Philippines and Vietnam over worthless islands. But I understand...
They're not entirely worthless. They may be sitting on a pile of natural gas and oil.
The islands are worthless, but the resources have some value. But you understand, the Americans, they come in and essentially steer up things because they don't want to lose their sphere of interest in Southeast Asia. And for the Chinese, basically, this is Chinese territory, and I understand that, first of all, for security reasons, because the oil shipments come through this region. And secondly, I think that if China were free to negotiate with the Philippines, Japan, Vietnam freely, without interference by foreign powers, they would have agreed on some production sharing arrangements.
Okay, so the boom is coming from that Southeast Asian part.
I believe that Southeast Asia can easily grow at, say, 6 to 7% per annum for the next 10 years from a very low level.
Okay, there's the gloom then, and the doom.
The gloom is geopolitical developments. I think the Middle East will blow up, and that will have an impact on asset markets.
When you say Middle East, are you talking about the result of the Arab Spring, or are you talking about perhaps Iran?
Well,
and,
I don't see much of a spring. I see winter time. But basically, we have everywhere changes occurring, starting with Libya, now in Syria. We'll have more. We'll have eventually in Saudi Arabia. And this will be a region full of tensions and potentially war.
Iran?
Iran is likely that it will be attacked at some point.
At some point.
Yes.
All right.
Well, it could be tomorrow, it could be in 3 years' time, who knows. But I think the Middle East will be a region of enormous turmoil, and that the Western influence will diminish against the will of the West, but it will diminish.
Mark, thank you so much for coming on the program. Marc Faber there from the Gloom, Boom and Doom Report.